Hello traders, welcome back to the channel. Hope you are having a very good day. So in today's video, we are going to learn about the basics of order flow. Okay. Once you learn the basics of order flow, you can build on to the knowledge and then you can learn how to spot the supply or demand zones. You can learn how to initiate a trade. You can learn trade management once you are in the trade. Okay. You will also learn when to exit a trade. It's such a powerful tool. So let's learn order flow today. Okay, so this is how the chart, it's how going to look like. Okay, you can see in the magnifying glass, that's your candlestick chart. Okay, so order flow gives you an x-ray vision into the uh, candlestick chart, giving you information on where the orders are coming in, whether it is going to be it's going to provide so much of information. We will learn that in subsequent slides. Okay, so these are the topics that we are going to cover today. So everybody know what is market order, what is limit order, right? But this information is going to be very crucial in learning the basics of how the order flow chart is constructed. Okay, now let's learn what is market order and limit order. For those who don't know, market order is something, it's an instruction where you say you go and buy immediately at the best available price. For example, we'll see an example also to understand. And in the limit order, we are saying you go and buy at a specified price or a better price. Okay, this is what market order and limit order is. Now let's understand through a price ladder or a depth of market and see when you place a market order what happens, when you place a limit order what happens. Okay, so let's say I am going to place buy 200 quantity at market. Okay, or let's say first we'll talk about what happens at a limit order. I'll say buy 200 quantity at a limit order. Now what will happen? Currently the price is here, okay, highlighted in the blue color, and buy 200 quantity at limit. Limit means I have to specify this price as well. Okay, now I'll have to say buy at, let's say, 97. When I place this order, what happens? The order gets visible in this particular price. Okay, so you said 200 quantity I want to buy at 97. So the order doesn't get executed when you place this order because current price is at 100, correct? And you have placed your buy order at 97. So until the price comes down to 97, your order will not be executed. Now there is another person who will say sell 200 quantity, okay, at limit price of, I would say, 104. Okay, now when this happens, your order go and sit here at the 104, which is the price. 200 quantity gets sitting on the ask side. Okay, so this is bid and this is ask, this is your price. So you call this also as a price ladder or a depth of market. Now this is what has happened. Consider this is one party and this is another party. Only these two guys are available in the market at this point. What will happen? Your current price is at 100. The last transaction has taken place at 100 and your next buyer and seller is sitting at 3 or 4 rupees away from the current price. No transaction will take place because the price has to come to 104 for the seller to sell that particular price, and the price has to come down to 97 for the buyer to buy at the particular price. So this is what is happening in an illiquid instrument. Okay, now consider, now we talked about limit orders, what will happen here, right? Now let's talk about what happens when a market order is placed. Okay, let's say I want to buy 200 quantity at market. When I say this, what has happening? Currently my market is at 100 and I say 200 quantity I want to buy. Market means it is going to look for orders that are currently available. It doesn't wait for certain price to come. So what I am going to do when this particular order comes into the market, so first it will go and hit 101. So price moves up 101, 50 is consumed for my order. Then it will go to 102, then 100 gets used up. So 150 quantity has been consumed for my 200 quantity. Then it will go to 103 and here I will use 50 quantity. So the remaining quantity now left over at the 103 is 100. Okay, now the price has moved from 100 to 103. You see that the price has moved. In the previous case, when you place a limit buy or limit sell, you are not responsible for moving the price, correct? But this market order, when you place, it actually moves up or down based on the type of order, and then it goes and hits the, so if you place a buy order, it goes and hit the ask. Okay, if you say I want to sell 200 quantity at market, when that happens, consider that in this place you were at 100. Now what will happen for 200? First the price will come to 99, it will consume 100 of it, then it will come here and then it will consume 100 of it. Now the remaining on this particular price will be 50. So if you place a sell order, then you are pushing the price to come down, looking for limit buyers. Okay, so when you place a market sell order, you are hitting the bid. When you place a market buy order, you are hitting the ask. So any order that is executed on the ask, can we say they are all market buy orders? Right? Any order that is hitting on the bid side, can we say they are all sell orders, market sell orders? And can we also say limit orders, whoever is placing a limit order, they are all like a passive buyer or a seller. So why we say that they are passive? Because they wait for the price to come. They are not aggressive in other case. Okay, now anybody who places a market order, they don't wait for the price to come to that level. They'll go and buy at whatever price that is currently available, or they go and sell whatever price that is currently available. So aggressive buyer or seller. Okay, anybody who places a market order, they are categorized into an aggressive buyer or seller, and these are the guys who are responsible for moving the price. Do we all understand how the price actually moves? Because there will be a lot of people with lot of experience in the market, still they do not understand this concept of why price moves. Okay, because they'll say there is a buyer, but for any transaction to happen, you need a buyer and you need a seller. Is that right? You need a buyer and you need a seller. Then if that is the case, for every transaction you have a buyer and a seller. So why is the price moving then in one side or the other? It is the aggressive buyer or a seller that determines which side the price is moving. Okay, now this is something that for many people it would be new, which is good because the journey begins from here now. Okay, now let's build on top of this knowledge and then we will learn more about it. Okay, one more concept that I wanted to tell you about is the bid ask spread. Okay, so you see that current price is at 100 and your ask is at 101 and bid is at 99. So the difference between these prices is called bid ask spread. Now in a liquid market, the spread will be very minimal. For example, you take a Nifty at the money options, you will find it the spread is very minimal, like few paisa. But if you go to any of the stock futures or stock options and go to little bit away from the at the money, you will find the spread increasing, because the spread determines how much of liquidity is available in the market. Okay, perfect. Yeah, if you have any questions, put it on the comment. We will address them. Okay, so now let's move on to the next item. Okay, so we discussed how the market, what is market order, what is limit order, what's a price ladder or a depth of market, what is bid and ask, bid ask spread, aggressive buyers, aggressive sellers, why the price moves. Everybody is clear? Okay, now let's go and understand what is an order flow or a footprint chart. Okay, a footprint or an order flow chart is mainly used by professional traders in combination with market profile and other tools. This particular order flow or a footprint chart is designed to track the order flow coming into the market. Okay, it allows the traders to observe how orders are being executed, providing a visual representation of the market's activity at each price level. Okay, now let's look at how the chart looks like. Okay, how to read those charts, and we have those charts available in fnotrader.com. Okay, now this is your simple candlestick chart, so you can open that in trading view, you can look at it. I have put my market profile indicator as well. Okay, so market profile with TPO is the indicator. You should understand it better so you can configure it based on your need. Okay, so I have I marked my okay, the resistance lines, support lines based on this, and then I have marked put my indicators here, and I also have my advanced chart within market profile, which basically have a real-time open interest charts as well as the order flow indicator that I have it. So this is a typical candlestick chart. Okay, now let's take an example of today, which is 13 March. Okay, there was a bloodbath on Nifty. Let's understand whether you are in a good position to see through order flow whether you get your confidence on the shorts. Okay, now this is where the market is open. So look at the previous day. Previous day it has gone up. Previous day it opened within the yesterday's, before that day range, it went above. Okay, which is also the resistance that it has created. Okay, so yeah, so it hit the resistance and then it came down and then it was moving in the sideways for the rest of the day. Now today the market actually opened near the resistance point. Okay, and then it came down. Now we are talking about a Nifty futures 5-minute chart. It came down below the VWAP and then it came down. It took a little bit of breather, support at the yesterday's support area. It went above, took a small pullback near the VWAP, and sellers were active here. They pushed it down and they have. So we are going to monitor this one in the order flow charts. Okay, so let's look at it. This is how the order flow charts looks like. So you see a similar candle here. So let me switch between this and this. So let me keep this so that it is going to be similar in the time frame perspective. So I have here a 15-minute candle. I see that it's a support. It's a resistance at the previous day resistance. I'm seeing that here, and you will see the same thing on this particular chart as well. Okay, so this is your first candle, and you look at the delta and the cumulative delta. So in order flow charts, what is delta and cumulative delta? Before that, let's see whatever we have understood previously. What do you see here? let's first understand how to read these charts, okay, before we even go into uh, find out what has happened today. So you see, this is a candle, and then you have information on both sides, and we know that this is bid and this is ask from the price ladder example, right? Now these are all the orders that has come in hitting the bid side of it. What are those? Remember what we have discussed. Any order that is hitting the bid side of it is the market sell orders, okay, and on the right hand side is your ask. Any orders that hit the ask side of it are the market buy orders. Clear? Yeah, great. So now once we understand this one, we are aggregating this one at certain price point. Let's say we are aggregating it at a 5 rupee level. Okay. Now every 5 rupee level we are at what? 22 500. Okay. So 22 495 500 is where we are at. And you see here every price that you see here is an aggregated at a 5 rupee level. How many orders have come in, at what time it has come in. Okay. And this is where the highest volume has come in. That's what we have highlighted in the blue color. Okay, and anywhere you see the order on the red color, that is the maximum sell order has come in compared to the buying that is happening at that price level. Any buy order that you see on the green highlighted one, that is where there is aggressive buying activity that has happened compared to the seller that is present at that particular level. Now when you see there is lot of selling, for example, you see this place, there is lot of selling that has happened. You see here there is lot of selling that has happened. There is two selling that has happened. Okay, so you see this one, there is a lot of selling that has happened. This is called an imbalance. Whenever you see a red color or a green color highlighted number, they are called imbalances. Imbalance between buying and selling, okay, or was selling. Now these imbalances, when they are at subsequent price levels, they are called stacking, okay, stacking of imbalances. Now this provides key information that there is lot of selling that is happening subsequently, which is pushing the price down. Okay, so everybody clear till this point how we are able to read these charts? Now let's go back and look at our chart. So you see here price hit this resistance point, it pushed down. Okay, so it is going to be like a complete range for yesterday's market, right? So until then, even though there is a lot of activity, we do not have to take, unless you are an aggressive seller, you can understand from order flow and then take a short somewhere here. Okay, but let's see how we can understand that better. So you saw from the price action, what do you see? You see that there is a resistance and then it has taken some support here, and then you see that the moving averages are going down and then VWAP is also going down. We will see the aggressiveness of the short in an order flow chart. Now let's come back here and look at first a few. So you see here this is one candle. Let me just delete all the grains and then look at the chart. Yeah, okay, now look at this particular one. There is lot of volume. Okay, 12,617 contracts were traded or exchanged hands. In that, open interest started at 2,47,000 contracts. Look at the delta, because we are in the order flow chart, right? We want these numbers to be seen. Delta is, in this candle I have sellers, I have buyers, correct? All of them are aggressive. That is what we track. We don't track what are the orders sitting on the order book. We track what has been executed here. Okay. Now sellers are here, buyers are here. Let's say I have aggressive seller totaling to 100. I have aggressive buyers totaling to 200. Now what that means, I have a delta of plus 100. Okay. This delta basically tells you who is winning the battle on that particular candle. Is the aggressive buyer or the aggressive seller? Okay. Now I have my next candle. In the next candle again I have sellers and buyers. Now in this particular one, since I say, let's say I have 100, and then my next candle buying side I see 500. So what is the delta for this particular candle? Plus 400. Correct? Now what is the cumulative delta? Cumulative delta calculates the delta from the start of the candle. Okay, so what is the cumulative delta at the start of the first candle? It is going to be equivalent to your delta. So you see that same thing, 1636 and 1636. So these many contracts were on the selling side. Now cumulative delta basically captures adds up the delta from the previous candle or the start of the candle. It adds up the running delta value. Now at the second candle, my cumulative delta value will be plus 500. Okay, like this every candle the cumulative delta captures. It will tell you who are the outstanding buyers and sellers that is currently present in the market. Clear? Perfect. Now we saw that in the first candle itself there were close to 1500 1600 contracts on the aggressive selling side, and then the second candle again it has come down. Okay, the delta is almost 1095, and you saw cumulative delta increased to 2700. So the delta is kind of increasing, and there was a small previous day low is where here. Okay, pre-DL, previous day low is here. So it took a small pullback, it went above, and then at this price point you see lot of selling here. You see the stacking imbalance. So there is aggressive selling here, here, and there are like 500 contracts, 300 contracts like that, 200 contracts like that. So all of the buying that happened here, thinking it took a support and went up, all the buying has been absorbed. There is another concept called absorption. Okay, so what has happened? You know that there is an aggressive selling that has happened. When the aggressive selling happened, the price is not going any lower. Okay, it started going here itself. It started going consolidating here. What that means, there is a lot of passive buying that is happening at this particular point, which is going to be your support zone. Okay, now you are getting it. You can actually watch this in real time how passive buying is happening. Okay, similarly the concept will be reverse in case of a passive selling. So you saw here there is a lot of buy volume that has happened. The delta is still positive, 501, 300 candle, 300 lots and 500 lots were on the positive side, but price could not move up. So in this place you have a lot of passive sellers. This is your supply zone. Okay, you can watch them, see there is a lot of buying that has happened near the VWAP, but price could not go up, it could not close. You see the next candle, it closed here. Okay, so that's what we are seeing here, and then there is a good consolidation that happened, and then you see that the aggressive selling picked up here. You see that one in this particular level. So we want to see what is a reaction to that. Is there going to be a passive buying or a support going to get active here, or they are going to give away? And we have already seen there are like 3,384 lots that have been on the aggressive selling side, which is still open. So net there are 3,384 contracts that were on the selling side. Okay, you saw that again they pushed like with 1,000 lot order, with 1,500 lot order. Look at this imbalance here, 1,000 lots, then there is 1,500 lots, 1,500 lots again. Okay, there is lot of selling that has happened, and then look at what has price happened after this. Now you are not blindly looking at just 4 points open, high, low, close, and you are actually seeing where the orders are coming in and in which side it is coming in. Do you see that? That is the beauty of order flow charts. It tells you how much order is coming in, which side it is coming in, what time it is coming in, all that information. Okay, so once you understand the order flow better, you will be able to utilize the information better and trade confidently. Now this is where the consolidation, and this is where it has given up. Okay, below this support line which I have drawn, which is also your place where it has taken up higher thing. Okay, this is your point, and this is also your, from the market profile perspective, this is also the place where there is a point of control or the highest volume that has been traded on the 6th of March. Okay, now this is going to be like your last level, and then look at what has happened. It's a complete bloodbath. Now the same, so this is not something that I'm nitpicking an example. This happened today. Okay, and you can look at what has happened in this particular day, on a range bound day, on this particular day, on this particular day, all of them. Okay, though there is something that is still not looking right because the market has come down a lot, but I do not see the open interest has been fairly, you can see this one, this mountain is your open interest. It has been fairly kind of flat, and then at the end of the day it has gone up. So it will be interesting to see what is in store for tomorrow. Okay, now let's get back to our slide and see what did we learn. Okay, so we saw what is order flow or what is footprint charts, and how to read the footprint charts or the order flow charts in F&O Trader. Then how to spot supply and demand, how to initiate a trade. We talked about multiple terminologies, right? There is something called an imbalance. There is something called absorption, stacking of imbalances. All of them gives lot of clues. Okay. Now this is just a beginning of the journey towards utilizing order flow for directional bias. Okay, now if you don't see much of heavy selling or a heavy buying that is happening, you will not be having a directional buyer. It's mostly going to be a range bound market. Now using all of these concepts, there are multiple order flow trading strategies that we can form. Okay, now we will cover that in the next video, provided there is a lot of demand based on your responses. Okay, yeah. So again, F&O Trader, we have two products: Discover, Quick Trade. In Discover you have order flow, you have order, you can do order flow analysis, you can do open interest analysis, you can do price analysis. All that can be done on Discover. On the Quick Trade, you can do all of your execution in a single flick. You can enter, exit, manage positions in a single flick. Be it you are a scalper managing like a 1000 or 5000 quantity, or somebody who sells straddles, strangles, directional strategies, non-directional strategies, and you want to manage all of your positions in a single flick, then Quick Trade is the place to go. That's all for today's video. If you like this video and if you would like to see more videos from us, please like, follow and subscribe to the channel. Thank you. See you again in the next video.